All right. How's everybody doing? Welcome back to another Sunday Night Live over here on the channel. As usual, before we start, I want to make sure you guys can hear everything so I can hear it good and clear. So I always like check my phone beforehand. If you're new to the channel, don't forget to subscribe to the channel. If you are a subscriber and you're back to the channel, don't forget to like the channel as well. The video, I should say, as well. And also, if you see that shooting star underneath, that is the hype button. It typically comes on after the video is over. So please don't forget to hype the video. Liking it and hyping it helps to push us through the algorithm, which you can get more content that talks about real estate if you are into watching different real estate content. As you guys can see here tonight, I have the People's Lender, Kevin Jefferson. So we're going to have a great conversation tonight talking about different forms of loans per se outside of the traditional FHA, VA, USDA, and conventional loan type. And so I'll let Kevin introduce himself real quick if you guys are new here, and then we'll jump into it.
Hey, good evening, everyone. I am Kevin Jefferson, known as the People's Lender. I am a mortgage loan professional. I have the ability to help you in all 50 states, the District of Columbia, and Puerto Rico. Hopefully tonight you have a lot of questions. And if at all possible, if you're watching live or the replay, make sure you get a pen and pad so you can take copious notes because we're going to talk about some good information.
Yes. And if you guys don't know, Kevin is on YouTube as well. It is the People's Lender, Kevin Jefferson, or Kevin Jefferson, the People's Lender. Head over there, give him a subscription or subscribe as well if you haven't already. Hey, what's going on, Miss H? Hopefully, if you have any questions, don't be shy to drop them in the comments. Appreciate you being here every Sunday. So let's jump right into it. And so the first question I have for you is around DSCR loans. And exactly what is a DSCR loan?
So a DSCR loan is debt service coverage ratio. That's the type of loan that people use for investments. It was put in place to help people buy investment properties who may have 20% down and the property cash flows. It was started because with Fannie Mae and Freddie Mac, they do conventional financing as well. However, you can only have 10 conventional loans at one time. So let's say it's you and a spouse. He or she has 10, you have 10. That's the max you can have. The only way to get in another one is to sell off one of those properties. If you say, hey, I want to keep this in my portfolio, I don't have anything I want to sell, then you can do a DSCR loan. The DSCR loan typically requires 20% down, and you have to have so I'm gonna give our guidelines and not everybody else's. For us, you can put 15% down, have a credit score as low as a 620, and you can put anywhere down between 15 and 35%. The 35% is when you have the lower credit score. So just remember, the lower the credit score, the higher the down payment requirement. There's different nuances, but for the purposes of the video, you just have to have the score, the down payment and closing costs, and then reserves. Reserves are equivalent to 1 month of the principal, interest, and taxes and insurance. So if the payment on your the mortgage on your DSCR loan is $2,000, then let's say you need 3 months reserves, then you're going to need $6,000 available to you, whether it's in checking savings, some type of bonds that's liquidatable, insurance, 401k, combination of them all. We just need to see that you have $6,000 available to you. And then the other part is the debt service coverage ratio part is, hey, the mortgage is $2,000 on this property. The rent needs to be at least $2,000 or greater. If the rent is $2,000 or greater, we check all the boxes. If it comes in higher, we're good too. If it comes in lower, we have to go back and strategize as to, do we do a 40-year mortgage or do we put down a larger down payment? So most DSCR loans, they can be 40-year mortgages with a 10-year interest only, as well as a 30-year mortgage. And then we have some ARMs as well.
So do you see, so for the like a DSCR loan, do you see like a lot more, I guess you can say, investors utilizing that type of loan? Or
yeah, so it's not for primary residents at all. It's only for investors. So most investors or business owners, they have not most, but there's ones that have cash that they have available, but they don't show enough on their taxes. So they go to DSCR loan versus conventional. And with DSCR loans, we don't check income, we don't check taxes, we don't get W-2s. All we pull is credit score. We do credit score, assets, which is what type of money you have, and that's all we want from the borrower. The house has to, or we get an appraised value where the buyer and seller, and then it has to cash flow, and that's the way it goes.
Okay. So you kind of answer a lot of the questions in that intro to what a DSCR loan is. But I guess another question is, can a person also refinance a DSCR loan? Is it refinance?
Yes, you can. You can refinance a DSCR loan. You can refinance into a DSCR loan. Example: I have investors who buy properties, need to rehab, so they rehab the house. Doing some type of private funding or hard money, and they want to keep it as an investment property. So then they refinance into a DSCR loan. What that does is that pays off the hard money loan, and then they get a 30-year fixed mortgage with the DSCR loan.
Okay. All right, that's nice. Let's see what Miss H, she has a question. She said, I want to know, since you cover all the states for lending, do you have to have a job to get that loan, or just going by the score? How would that work for a Vertex getting a loan?
No, you don't have to have a job, because it's not based off of you in terms of your income. It's based off the cash flow. So you may hear it called an investor cash flow loan. That's what it is. It's based off the cash flow of the property, and then your assets. So no, you don't have to have per se a job to get it. But I don't know the so I can't answer that part.
Yeah, I don't know what the Vertex thing is. I don't know what that is. You have to.
Veteran. Okay.
Veteran. I mean, okay.
I was like, what? I'm getting ready to Google it. Like, what's Vertex?
Yeah, I never heard that one before. I was like, I don't know. Maybe you. I was like, that's something I never heard.
So yeah, that's fine for a veteran. If you have the funds for down payment and closing costs, as well as the reserve, yeah, you can get it. You don't have to have a job. But Miss H, let me ask you a question. You own a home, and the reason why I ask is because if you don't own a home and you're a veteran and you qualify for a VA loan, you can purchase a 1 to 4 family home with 0% down, as long as you live in one property. So that's an opportunity. That's the cheapest opportunity to get into investing, in a sense, right? Yeah, because you only have to live in that house for 1 year if you're not utilizing any type of down payment assistance, and then you can move out and get your next home if it's single family. And the cool part is you're allowed to use your VA loan more than once.
She said, yes, I know that much. Okay. So she said she knows as much as that as far as utilizing.
My bad. Sorry, Miss V. Miss H. But yeah, you can be a veteran. It doesn't matter. They just want to make sure you have the assets, the credit score, and then the property can cash flow. And that's the important part, cash flow and everything. Hopefully I answered your question.
Yeah, hopefully. Oh, she said she did her research.
All right.
She said, I did.
We're going to invite you on next time.
Yeah, I'm like, I love Miss H. She goes, she's always tuning in from this channel to Jackie's channel, Jen Sylvester, different wonderful real estate YouTubers. They're not just YouTubers, they're just great agents in general. But
gotcha.
So yeah. So what about for DSCR loans? Are they like short-term rentals allowed with them? Which I guess.
Great question, man. Okay. You can do long-term.
Okay.
You can do short-term. You can do mid-term. Okay. And when I say mid-term, like if you got someone who has a nursing assignment and they're there for, the 13 weeks, like travel nurses or medical professionals are. So yeah, you can do it. The only difference is with the short-term rentals, like most people call them Airbnbs, mm-hmm. They require larger down payment, which is 30%.
Okay, so Just gotta have more money put down in your pocket, well, from your pocket.
From your pocket, yeah.
And then we already kind of touched on, like you said, the credit score, all those different things. So I'll move on to the next type of loan. If you guys have any other questions about a DSCR loan, you can also head over to Kevin's channel because he's actually done a video that lays this out in full context outside of this short, brief chat and that we're doing here. She said, I'm old, y'all. Seen a lot of changes. Something always changes. Yes.
Yeah. What they said, the more things change, the more things remain the same, though.
Yeah, that's true. That's true. So the next type of loans, I guess we would jump into is an asset loan. Again, this is another way as far as loans. So what exactly is an asset loan?
So it's when you, I'm going to give an example.
Okay.
Right. So let's say we have a person who, got a settlement for $1 million,
Okay.
but they don't work. We can use that $1 million and give them a monthly stipend. They don't have to be getting that stipend, but we can break that income down monthly. Okay. To where it shows that, okay, they get X amount of dollars a month. This is the qualifying income. We typically break it up over 36 months. So whatever that is times $1 million, it allows for you to use that lump sum to buy a house and show that you have a monthly payment without having a job. Mm-hmm. So that can be used for investment properties. That can be used for primary residence, 1 to 4 family. So it's someone who has assets. Let's say even it's not even $1 million.
Like liquid, like how about if you have like houses or any other entities, would those be considered inside an asset loan or no?
Nah, it's typically cash available to you. Like I know people who, let's say the person sold their house, but they don't have a job. They sold a house to get the cash. We can use that as assets. They may be in between jobs. They can use that as assets. So it's pretty much using that money that you have available to you and showing some sort of income derived from it, and then we can help you get qualified. I can actually do that using FHA financing too, man. Not a lot of people know that either.
I'm like, there's some gems happening tonight, y'all.
Yeah.
So I know. So you said as far as like the assets, you already told us what kind of qualifies as far as those assets. And you also told us that we don't need to have no employment. So that was another question I had on there. You just have the asset. I guess how much in assets is required? So it's not outside of it's just the money. That's all you need. You don't need anything else.
It's just the money. It's not necessarily a set amount. Like I've seen people who had jobs, but they didn't qualify for enough. But again, let's say they sold their home, sat out of the market for a while, and they jumping back in, but they still have that lump sum. Example, let's say a person had $72,000 from the sale of a home, and they held on to it. Then we would divide that by 36 months, which would give them about $2,000 a month income. And we can use that as income, and we can get them to purchase a home. That's $2,000 additional dollars that they can use for qualifying income.
Oh, okay.
Yeah.
So that makes sense. Let me see what Miss H said real quick before we go on to the next questions I had. She said, so why would someone do, I guess she meant to say, so why would someone do that? Just pay cash for a decent home and be done with it, with that part. So she's basically, I guess she's saying, just buy the house with cash and don't even have a loan on the back end. So I guess she's saying, why would somebody do that instead of just buying it out cash, right? Cash and instead of
multiple reasons, right? So one reason would be they could put that money in the market and potentially get a greater return. Right? That's one thing. The other thing is, if with them not having a job, if something happened and all of their cash is in the house and you don't have a job, it's going to be hard to refinance if it's a primary residence. So there's different reasons. But if you got $1 million and you want to buy a $150,000 house, maybe so. It just kind of all depends. But what you said makes sense, but there's also reasons behind why they would get a mortgage. I mean, they are billionaires and they have a mortgage.
Yeah,
So
that's true. I'm like, for some, I don't know on your end, is it? It's like going in and out on my end. I don't know why, but we're gonna get through the video. Is it going out in and out on your end or no?
it looked like one of us froze for a second, and
Yeah.
it's raining hard here. I
Oh,
don't know if it's the
it might be the
power
rain.
lines or what. Yeah.
Yeah. But we're gonna keep trucking through it. Hopefully it'll play good on the replay. Hey, what's going on, Lang? Thanks for coming tonight, tuning in. But that does make sense as far as what you're saying, as far as putting all of those assets into one place, right? If you only have, say, $300,000 in cash and you're buying a house, and the house is $300,000, why not have some liquidity outside of that? Put a little bit in, and then, like you said, maybe invest it somewhere else or put it to the side. So if anything should happen, you'll be able to have some cash on the side. So that I think that's what you were trying to say.
That's what I'm saying. Yeah.
Okay. Ms. H said, now you the first person that has mentioned that about asset loans. So thank you. So you're welcome.
No problem. Thank you.
You're welcome. So a little bit more about an asset loan. So I'm guessing, is there a credit score required for an asset loan? Do you need a credit score?
Yeah, you do need a credit score. Minimum credit score is somewhere around 620. Okay. With the asset loan, you got the money. So it's, it's not, we just have to keep you within your price range based off the amount of money you have.
Okay. And then I guess we kind of mentioned this, but are asset loans good for people who are retirees? I guess.
Yeah, if they have, if they're retired and they got a chunk of money that they want to do something with from either like a annuity or some type of policy or whatever, they can utilize that. It's no discrimination.
So if they take their life insurance policy that in the term or whatever they say per se, I'm not a life insurance agent, but once they kind of cash out on that, they can kind of take that money from that policy and do an asset loan if possible if they don't have a job.
Yep.
Okay. And then so what are you might have mentioned this, but I just want to reiterate it. What are the interest rates like for an asset loan?
So with asset loans, like if we do it outside of FHA, they're slightly higher. Okay. When I say slightly higher, you may be looking like a 7 or 8. And some people say, oh my gosh, that's high. Just remember, the less documentation you provide, the more risk it is for a person, the higher the interest rates is typically going to be. But it all depends. Like anything else, you can potentially buy down the rate. But somewhere around 7 or 8, and there's no mortgage insurance required on those.
Oh wow! So you don't need to have you don't have to have the PMI or the MIP if you use FHA or conventional.
No, if you use FHA, yes. If you use the asset depletion loan, which was the original loan we were talking about, then you don't have to have it. But if you use FHA or conventional, if you're putting down less than 20% on those two, on conventional you have to have it, and FHA you got to have it regardless whether you put 20 or not.
Okay. So if you guys are just entering the chat on the live stream, we have Kevin Jefferson here tonight. He is the People's Lender. If you have not, please go over to his channel and subscribe so you can stay in tune with all the knowledge around financing and lending. And we are just talking about the different loans outside of those typical conventional FHA, VA, USDA loans, those 4 typical loans. Let's see what's going on in this chat. Hey, what's going on, Croy? Good to see you. We are doing good over here. Hopefully you're doing well down there. I believe he is still in Florida. Ms. H said, can a person take equity from one home and use that for an asset loan, or will that hurt them doing
that? You can take the equity from one home and do like an asset depletion loan. But if you take the equity from one property, I would just put the 20% down and do a DSCR loan. But you can do either one. Yeah.
Okay. All right. So some good information here. So let's jump from these asset loans. I think we kind of hit a lot of those questions as well. And let's jump into the bank statement loans. So what exactly is a bank statement loan?
So a bank statement loan is when someone is self-employed, business owner, and they get deposits into their bank account. We can utilize personal or business, and we can use the deposits to give them a qualifying income.
And I guess you already said. I was about to say, who are bank statement loans for? But you kind of touched on that a little bit. How many months of statements do a person need as far as to qualify for like a bank statement loan?
So we can do. I mean, there's ones where you only need 3 months.
Oh wow!
But the most common ones are 12 and 24 months.
So if you only need 3 months, I guess can you tell us a little bit about the 3-month one? Because I know somebody probably gonna be on here 3 months.
Yeah, so the 3 months of bank statement loan, the 3-month bank statement loan, you only need the most recent 3 months of bank statements with deposits. Now, I will tell you, typically the deposits have to be consistent, as well as your down payment may be a little bit higher because they're requiring less information.
Okay, that makes sense.
But other than that, like 620, 660 credit scores, I mean, it's so many different options for people to buy if they have funds. Because some people have money and no job, or they don't have tax returns to show. So,
because I run into a lot of, I guess you could say, self-employed people who they end up putting so many things on their tax returns, right? As far as to get the what you call down, I forget what it's called. I'm going blank right now. But like, you know, they overdo. They'll say like they didn't make this much because they're putting all these deductions on. And then when they go to try to buy a house and do the conventional way of buying a house through financing, they're like, oh, you need to go file your taxes or do something X, Y, and Z. So because this would happen, especially because I run into, which is interesting, a lot of truck drivers do this. Because every time I talk to a truck driver, I'm like, you gotta go do your taxes. So can you say this could possibly be an option for someone like that? Because typically the self-employed people kind of venture on the bank statement part outside of that, or as like, you know, for self.
Yeah, they can. So like, I mean, majority of bank statement loans I've done have been for truck drivers, because they make so much money, and they typically don't have a lot of debt. They're on the road, so they typically don't do their tax returns, and then, you know, they have money. Now there are some truck drivers who do their tax returns and they can do the traditional FHA, VA, but it's perfect for someone like a truck driver who gets a ton of cash flow into their account. It's a great opportunity for them.
Okay. And then I guess this kind of flows in that. Do they need the tax returns? I kind of like mentioned it a little bit, but do they need tax returns?
Nah. So on a bank statement loan, we need you to have the credit score. We need a business narrative of your business, and then we need bank statements.
And that's it. And what does like a typical credit score for a bank statement loan kind of look like?
We can go down as low as a 600.
Oh wow! Okay. Wow.
Yeah, we can go down as low as a 600 credit score.
And that's good to know. Let's see what Miss H has here. She says this is outside of the bank statement loans, but she says, when did that PMI for an FHA? So for FHA is MIP. I know sometimes people get it mixed up, but PMI is conventional. But when does the MIP, I'll say, for FHA loan come about? Because I didn't have that part of my loans years ago. Lenders keep saying I did. I had my money down for FHA loan for MIP over 35 years ago.
I don't know. I mean, I don't know when mortgage insurance became a thing, but I've been around for 21 years and it's always been a part of FHA. But I'm not sure. So mortgage insurance premiums help protect HUD. If you get into foreclosure, so HUD guarantees the loan 100%. If someone forecloses, HUD pays the lender back, takes the property back, sells the house on the market. Well, them taking the money from mortgage premium, the upfront mortgage insurance premium, which is 1.7% of the loan, as well as the monthly payment, and they will they reimburse people for it. Reimburse the mortgage companies for it. I've been around. It's always been there. When was it implemented? I have no clue, but that's a great question. I've never, ever had that question.
I'm like,
that's a great question.
Yeah, that is that. She said they protected, not the buyer. So she said they protected themselves, but not the buyer, but the mortgage.
But if the buyer loses the house, the HUD has they have to protect themselves.
Mhm.
If you lose your house, HUD has to reimburse the bank because they
Mhm.
guaranteed the loan.
Mhm.
So they're protecting you. The buyer's protecting themselves by paying the mortgage and insurance and taxes.
So they have to. So they're looking for protection on their side because they're sitting here giving finance and stuff and all these different things. They like, well, we need some protection on our end in case you lose this house. So back to
Yep.
the bank statement loans. I know you said I had another question here, but it might have been similar. What down payment is needed? I think we kind of touched on a little bit, but I guess what's the minimum down payment need for a bank statement?
Bank statement loans anywhere from 10% as much as 35.
Okay.
The 35 is probably going to be for a lower loan. Is going to be for a lower credit score. The 10% is going to be for a higher credit score.
That makes sense because that risk adverse type of situation, less money down, they want, or with credit score they want more. And I guess let me see. I'm over here looking at my notes, so I apologize if I'm looking on the side of the screen. I'm just trying to make sure I hit everything, you guys.
No problem. I'm trying to slow down in my answers. That way I don't answer all your questions in one.
I know. I'm like when you're saying it, you like boom, boom. I'm like, oh, dang, he done answered everything. I need to go figure out a way to. But that's good though. It's good, And I appreciate Ms. H being here asking questions. If anybody else is on here live tonight, again, we're being joined by Kevin Jefferson. He is the People's Lender on YouTube as well. You can definitely head over to his channel, subscribe to his channel, and get all this wealth of information and knowledge when it comes to financing. Live on YouTube, whether live with him or uploaded videos. He does both. Hey, what's going on, Rhonda? Thanks for joining tonight. Appreciate you being here. So I guess we'll jump out of the bank statement loans. If anybody has any more questions around that, just let Kevin know and we can hit on that again. But I was going to talk, I guess, a little bit about reverse mortgage. What exactly is a reverse mortgage? Because I know sometimes they kind of utilize this or send this out to older people about using a reverse mortgage. So what exactly is a reverse mortgage?
So reverse mortgage is with a typical mortgage, you're paying out funds. Reverse mortgage, you're receiving funds. So you don't have a mortgage payment, right? Now, if you refinance into a reverse mortgage, you may get a payout. But if you're purchasing a home, and a lot of people don't know, you can purchase a primary residence with a reverse mortgage and not have a mortgage payment. Most people think it's, I can refinance and not have a mortgage payment for the rest of my time with this home, but you can actually physically purchase your primary residence, whether it's your first, second, or third home, with a reverse mortgage and not have a mortgage payment after you get it.
And so who typically, I guess, qualifies for a reverse mortgage? Is it just for older people or does anyone qualify?
So I'm not going to say older people because I'm not going to get in trouble with anybody.
Okay.
But I'm going to say you need to be at least 62 years of age, which at 62 years of age, you're young on that spectrum. So you're going to have a higher down payment requirement.
And of course, it's like, do you still have to own, like, do they still own a home per se? So I think you kind of answered that as far as owning a home.
Yeah, they still own the home.
Okay.
They take out, depending on your age, they take out a certain amount of money or require a certain amount of money for taxes and insurance, so you don't lose it to tax sale or insurance, or not having insurance because of loss. But you still have, it's your house. You can paint it what you want, color what you want. It's yours until you pass. And then when you pass, your family gets a year to either refinance it and buy it or sell it.
Okay. And that was one of the questions I was going to ask. So that's how I kind of went in Lewis. So it's like, what happens when you move out or pass? We kind of did the age requirements, 62 or older. what costs are involved, I guess, when trying to do a reverse mortgage? Or is there any upfront costs, any back costs as far as with a reverse mortgage or on the back end percent?
Yeah, there's upfront costs. So with a reverse mortgage, when you're looking to purchase it as a primary residence, you have to have a large down payment, anywhere from 30 to 40% down, right? And somebody gonna say, "Oh, well, that's expensive." It's gonna be dependent upon your age too. The closer you are to 62, the higher your payment is going to be, right? And the further away you from 62, your down payment gets a little bit lower. It works for someone who is downsizing. So I own a home. In this climate, I'm gonna say that I own a home. I want to sell it. We've got a lump sum of money. We'll put it in. We were gonna buy a house anyway. Do a reverse mortgage. We do the minimum down payment that they require, and then we don't have a mortgage because we're in our twilight. Got retirement, and we just don't want that expense.
Okay. What Croy said. Croy, Clark, this is a good topic. So we'll go back to bank statement loan real quick. Can you do a bank statement loan with a W-2 and sole proprietor? I'm guessing that's what he means. Business if you have both but gaps in the W-2 income.
So you can use W-2 income on a bank statement loan, but it has to come from a co-borrower, meaning somebody else on the loan. In terms of using it to fill in gaps, my company allows for a lot of exceptions. If you were trying to use both, you would probably have to still be receiving both, meaning you would have to still be getting that W-2 income as well as receiving income from the sole proprietorship. But you can also do the same thing with an FHA loan, VA, USDA, and conventional.
And then there's, I guess with this question too, is there like a time frame? Because I know sometimes when people are working jobs and everything, they'll say you need to be on it for 2 years or a certain amount of time frame. Is there a time frame if he, outside of doing a bank statement loan situation, but if he had a W-2 and a sole proprietor business, is there a time frame that he would need to fulfill to qualify?
So on the bank statement loan, I don't know if using both, you would need a 2-year history in both like you would with FHA. However, when you're using a bank statement loan, your business, or you need to have been in business for at least 2 years. Even though you might be using 3 months, 12 months bank statements, you need to have a history of having a business established.
Okay, that makes sense. They don't want to just give money out to anybody that just started a business yesterday. Hey, what's going on, Donna? Thanks for joining us tonight. Let's go. Miss H has a question for that reverse mortgage. She said, why is the age 62 or older? Are they looking at the stable income and home ownership as assets to be able to pay that reverse mortgage loan? I'm trying to understand the age part of that.
So the reverse mortgage is established. I don't know why they selected 62. If I had to take an educated guess, because at one time that was a retirement age. So it's more so for people looking to go into their twilight and retire. The gift is people are living longer now. We just got one of my family friends, his grandma just turned 105.
Oh, wow.
And she still walks. She was driving up until she was like 90.
Oh, wow. That's a blessing.
Yeah, she's 100. Yeah, she turned 105 May the 10th.
Oh,
so
wow.
People are living longer. But 62, if I had to guess, it's because it's retirement years. And then there's a formula that they utilize to calculate how much they hold back, how much down payment they need to make sure they cover the taxes and insurance so you don't lose it. But I'm assuming that it's for people in retirement versus younger folks. You got a joker doing reverse mortgage and they're 22 years old. That might not make sense to them.
That does make sense, because I feel like too, if you're younger, you still have that time to kind of grow. You can still go out and get another job can still, you know, advance in your career. And most times after you hit that 62 plus year, you are settling down. You have already retired if possible. So I guess that would make sense on that side. One of the questions, well, you did answer the question because I was going to ask about reverse mortgage. Can the heirs keep the home? But I think you said they have a year to pay it back if they keep the home, right? Okay. And
yeah, they got a year to pay it back or refinance. Yeah.
Okay. And then if they don't, can the home be taken to foreclosure or whatever? I guess it depends on the state. Like, how would that end up happening if they fail to do so? Can it be taken back by or seized by the bank in foreclosures or something?
Yeah, they can foreclose on it. I've seen some foreclosed on. The biggest thing I would tell anybody, just say research, and you say, oh, shoot, we got a reverse mortgage. We don't know what to do. Communicate with the bank.
Okay.
They don't want the property back.
Yeah.
If you communicate with them and see what your plans are, they will work with you, but they will start the foreclosure proceedings if they don't hear from you because they don't know what's going on with the house.
Yeah. And they think maybe they might think too that there's no heirs, somebody passed away, and you know, and they just gotta. At the end of the day, it's like you said, the bank is not in the selling real estate. That's why I always tell people they're financing. They want to make their money. They put the interest on there. They don't want to sell real estate. So I always tell people, don't, like you said, reach out, contact the lender, your mortgagor, the banker, whoever is over that loan, and have that conversation because they're not in the business of trying to. They don't really want your property back either. But Rhonda said, what happens if the person lives longer than the value of the house?
The house, how can I put it? The house, unless the house burns down or is dilapidated, they can live as long as they want. As long as they're in the house, and let's say, you know, there's average of 5% equity built in homes every year, they still accumulate that equity, right? The only way they would outlive the house is if a house gets trashed or something. So it's when you buy the reverse mortgage as a primary residence, you're putting your down payment down and there's no mortgage. So you're not paying anything out. If you are refinancing, you owned a home, you refinanced, and you got the taxes and insurance and stuff covered, then you're reimbursed a lump sum of money. So the only way if you're asking what happens if you outlive the money that they allotted for taxes and insurance, I'm thinking at some point you'll have to start paying. I've never had that scenario, so I don't know the answer to it. You guys got some amazing questions.
Yeah,
y'all gave me some content.
I'm like, that's a good question. Especially in the situation.
That's why we like you guys on the live.
I was like, if that situation I was about to say, if that situation happened with your your friends who lived to 105, you said your friend's aunt, or would you say your aunt?
She's 105. Yeah.
And what if she did a reverse mortgage and outlived? How would that, But that would be interesting. Miss H, she said, what would a person do after they use up all the money in the reverse mortgage? I saw a 90-year-old had no money and didn't know what to do after. Can they refi for help?
Yes, they could potentially refinance. By that time, equity in the property, and you can refinance a reverse mortgage to either get out of it and get into a traditional loan because you need cash, or refinance it as long as there's a net benefit to you, lower interest rate, or being able to pull out additional cash. But they had to have some funds. I mean, Social Security, some type of retirement. But if they don't, they can refinance as long as equity in the property and pull money back out and rinse and repeat.
Okay. Lang said, "Great show."
So the last part of her question, was yes, a refi can help. Yeah, I'm sorry.
Oh, no problem. So we got Kevin here for about 5 more minutes. Then he's going to head over to his channel. He has a live happening at 8:00 p.m. So if you guys want to head over there and check him out, he'll be interviewing someone as well in regards to real estate stuff. And once he jumps off, we'll keep going for the last 15 minutes over here. So I do have another question. Well, not reverse mortgage, but another type of loans. And I know I didn't send this over to you, but what about like the no doc loans? I know back in the day they were kind of utilizing these, and some things happened where it led to 2008 situation where I'm not looking at documents and all those things per se. I guess can you tell us a little bit of information about a no doc loan if possible?
Yeah, no doc loans are no documentation, but you have to have assets. Like you can't have a 580 credit score, no job, and no money, and want to do a no doc. You gotta have some type of assets or liquidity. I'm laughing because people are calling and say, "Hey, I own this business and I want to do a bank statement loan with down payment assistance." I'm like, "That's no such thing." So like that's why I started laughing, man. But yeah, no docs are just you gotta have assets somewhere. So it's kind of equivalent to asset depletion. When it's no doc, that typically means no documentation on your income, but you have to have the assets, whether it's liquidation of 401k, bank statements, you got money, IRA, stocks, insurance policy. You have to have some liquidity somewhere.
So you just can't.
The asset so asset depletion is kind of a no doc loan.
Okay. So I just can't go in there and say, okay, I want to do a no doc loan, but I ain't got nothing. I just want to come and try to get and just show. Lang said she said we enjoy both of you. 105 is amazing. I don't know what's 105. What's that mean, Lang? 105? I don't know. I might have missed something.
Oh, because my friends
105
years old.
Yeah, duh. I'm like 105. But I guess we'll end it there so we can get Kevin over to his channel. Again, if you guys don't know, Kevin also has his own YouTube channel. It's called Kevin Jefferson, the People's Lender. Let me see if I can share it on screen real quick. So then that way, if you guys want to, you can head over to his channel, give him a subscribe, check him out. He's coming on tonight at not 7 o'clock, at 8 o'clock Eastern time.
Yeah.
And then that way
Where your parents at, man? They usually in here.
Oh, my dad?
Your dad usually in here. Yeah.
I just got off the phone and he said he was going to be in there, and then he didn't even he ain't here. He must have fell asleep. So Kevin Jefferson, the People's Lender. I'm going to share his.
He watching the game.
He probably is. Probably watching the game and just fell asleep. If you guys, this is his YouTube channel, so you can definitely head over to Kevin Jefferson's YouTube channel. Give him a subscribe. And check out all the amazing content that he has that talks about financing, and he will be live tonight at 8 p.m. Eastern time. So right after we finish over here, if you guys want to head over to him and check him out and keep going with the conversation, because I know they'll probably head over and start asking questions that we probably forgot to ask over here. But I appreciate you being here. Thanks for taking the time out to be here tonight, Kevin, and answer some questions around different options as far as financing outside the traditional FHA, VA, conventional, and USDA.
I appreciate it, man. Anytime. And I got to get you back on my show, man. Let's do it in June, National Home Ownership Month.
Okay, yeah, no problem. And I'm going to share his. And if you guys want to contact Kevin, his email is kevin.jefferson@summitfunding.net. So if you want to contact him outside this, and also his information will be below in the video as well with his email address if you guys happen not to catch it on the screen. All right, then. Well, I'll see you soon. I'll see you in a little bit because I'll head over there after I finish this live, and I'll check you guys out too tonight.
Appreciate it, man. Good night, everyone.
No problem. Take care.
All right, bye-bye.
Bye-bye. All right, you guys. So we're going to end the last bit of the conversation out tonight. I appreciate everybody being here tonight, answering questions. Hopefully this gave you some context around other loans outside those traditional FHA, VA, conventional, and USDA loans. Those are the typical 4 loans that most people kind of utilize a lot. And as he was saying, a lot of these different loans are different options to explore as far as like being a personal business owner, maybe a truck driver, maybe having your own, brick and mortar per se. Devon, this is a great show. Thank you, Lanks. Thanks for being here tonight. Thanks. I appreciate you guys being here supporting Kevin. He's a wonderful lender. And so right now, before we head off of here, I am going to share this article and dive into sellers are slashing home prices in certain particular cities, in these 5 cities in America. So if you are in one of these 5 cities, you might have seen some of that slashing of a price happening. It says sellers are still slashing home prices in these 5 cities, and this is by Realtor.com. And it says home buyers who have been staying out of the market waiting for prices to dip may be running out of time to snap up that deal. While the share of active listings carrying a price reduction remained elevated by historical standards at 16.7% in April, they are less common nationally than they were a year ago, suggesting that prices are settling where they need to be. However, in several markets, price cuts remain common, led by Phoenix, where nearly a third of listings, 29%, carried a price reduction last month. Then you have Tampa, Florida, 25%, San Antonio, Texas, 25%, Denver, Colorado, and also Portland, Oregon, 24%. They are seeing price cuts. And it says Phoenix and Tampa also top the list of the major markets with the most price cuts in April 2025, with price cut incidences, I guess I'm saying that right, of 31.3% and 29.3% respectively. So as you guys can see, this was an article. It was from 2025, so this number has probably shifted a little bit as well as far as more price cuts happening in 2026. Thank you, Miss H, for coming to the channel. Thank you, Clark, supporting you when I can. Good show as always. No problem. I appreciate you being here, Miss H. I appreciate you guys jumping on, having conversation. It's always great to get more and more knowledge around things, right? We learn something new every day. And hopefully you guys can, take some of this information and keep exploring it with those different type of loans, the asset loan, the bank statement loans, the no doc loan. I also wanted to talk to him about the 1099 W-2 combo loan, but I know he said, Kevin said he'll be doing a video about that on his channel. So like I said, if you guys can go over to his channel, subscribe to his channel as well so you can get more information and dive deeper into like that DSCR loan. He has a video about that. He has a video about all these other loans in full context, a little deeper than what we talked about real quick. But we only have a certain amount of time, so I just wanted to get that in so we can have a conversation and hopefully, bring some spark and some interest where you guys can look outside of what we talked about. Why are these metros continually topping this price cut list? He asks, is likely part unrealistic expectations and part wishful thinking, but price reductions do mean sellers are getting the message loud and clear. So yeah, so people, again, we always have this conversation in regards to if you are currently listing your house in certain markets, you have to be mindful of your market, your area, what the trend is that's occurring. You cannot be the only one in the neighborhood trying to list your house for, let's say, $700,000 when everybody else is selling for $500,000, and particularly the ones that have already closed. If you've seen that they've closed for $500,000, don't just think because, I went and I put a new kitchen in and I went and I painted my walls and because this is the conversation I always hear from a lot of sellers. My house is better than that other house. Like, even though the other house looks great in the pictures, but I have a spa-like bathroom, We have to be realistic as far as if you're pricing your home. And also, I guess it depends on how quickly are you trying to get out of your home, right? Some people are just putting stuff on the market to see what they can get. They don't really have a realistic view as far as getting out of it. They just want to say, hey, let me put it up, see what I'll get. And then you have other people who are trying to actually sell their home. So if you're a person trying to actually sell your home, be realistic to what the market is telling you. And don't just put it on the market at a price that's unrealistic to what you're seeing trending in your area. All right. Of the markets with the most reductions, 4 out of 5 have seen fewer discounts than last year, indicating that perhaps a bottom is near. Price reductions decreased nationally. It says with 16.7% of listings reduced last month, down from 17.9% a year earlier. Sellers appear to be adjusting expectations up front rather than testing the market with higher prices and cutting later, concludes Realtor.com. And it says from April 2026 monthly housing report. This year has seen both fewer cuts and lower medium list prices, suggesting sellers have internalized the generality more buyer-friendly market conditions and are adjusting price expectations before rather than after listing, explains Krimmel. So again, this is local to where you're currently at. In New Jersey, when I talk to, like Jackie, or in Massachusetts with Jen and them, people are still pricing and they're still getting a lot of bids, a lot of offers, and they're selling for overlisting. Then you'll come to the Sunbelt states, like, Georgia, or let's say Florida, or Tennessee, certain areas, you got a few sellers still overpricing, but most of them are coming to a realistic adjustment to the price as far as setting their house on the market. And it's okay. To have a realtor come in and tell you what you don't want to hear, right? A realtor that comes in, that sits with you and is telling you the actual data of what they're seeing on the market, you have to be open to that information. At the end of the day, you're the seller. You can sell your house for whatever you want to sell it to. But again, what are you trying to get? What is your ultimate goal? What are you trying to get? Are you trying to sell the house, or you just want to see what you get for the house? If you're trying to sell the house, listen to the realtor if they're showing you actual comparable comps. Another thing that you could possibly suggest from that realtor as well, say, hey, I see that there's a comparable comp down here. And I do this sometimes with sellers if they have time. A lot of sellers might not have time to do it, but I'll try to find a comparable in the area that's on the market listed. And I'll say, hey, let's go check out this house and see how it compares to your house. So then that way, whether we see one or two that's comparable to your house, because we're not going to see 20 million. We're going to see about one or two that's comparable to your house, so you can get a more close kind of visual of that house and how it compares to your house. And then we'll take those other comps that we have laid out in front of you outside of the two or one that we saw in person, so that you can come to an actual conclusion of which you think is a good price to sell your house at compared to what you saw that we checked out, right? And then also understanding the days on the market too when it comes to selling that property. Hey, what's going on, Cotexita? Went to Costco over 2 hours ago. See how that went. You're just getting back, so you had a lot of food, a lot of people in line grabbing at Costco or toys or whatever they get from there. Yeah. But thanks for joining us. If you want to, you can go back to the beginning of the video. We had a great conversation with Kevin Jefferson, the People's Lender. He also has a YouTube channel, and we talked about different loans outside of the conventional norms, as far as we talked about bank loans, mortgage, reverse mortgage, asset loans, no doc loans, DSCR loans, and then what else did we talk about? I think that was about all. But definitely go back, check them out, get a little bit of context around that. Miss H said, do you know when a senior is buying a home and wants a survey of the property line location to their neighbor, any discounts for them doing that, or free to show the boundaries for the homeowner? So Miss H, I don't know, because this would probably be based on your actual city and county. So it would be based around where you currently live at, and having that conversation, calling down to, or not the city or county, sorry, calling down to the surveyor in that area that does those surveys, and asking them that question to say if there's any discounts or if there's anything free, being that they're a senior. So I don't know if they offer that or not, but hey, you never know. As you know, most people depend on whether it might be age, maybe if you're a veteran or other type of things, they might have discounts. I know some companies will give discounts to teachers, to first responders, to, like I said, veterans, possibly seniors as well. So I would reach out and have that conversation in regard to and see if they offer that discount for a survey for a property line. So, but I don't want to tell you something that I don't fully know. She said, okay, thank you, Clark. No problem, no problem, no problem. So again, it says this is consistent with survey findings showing that sellers expect to make more concessions, even as they expect to be more likely to get their asking price, he says. So this kind of goes into more as far as the areas where we're seeing those price reductions, and I don't want to, and then that's the end of it, and then it breaks down to like Arizona being the #1 market. So you definitely guys want to check out that. If you want to, you can head over to realtor.com, get more full context around that article. But again, if you are currently listing in this market, you want to be mindful when listing in this market and not overpricing, depend on, what are your goals. And then if you're buying in this market, you want to be mindful as well. I'm going to bring one thing up real quick as well. We'll switch over to a Metro Atlanta. I wanted to bring this up. That the condos, if you are trying to buy a condo right now in Metro Atlanta, be very, make sure you understand what you're buying. Make sure you understand the HOA. These condo HOAs are very pricey depending on where you're buying in the Metro Atlanta area. This particular condo right here, this is inside the prestigious Atlantic building, which is in the Atlantic Station area in the Midtown area of Atlanta. And a lot of these condos were selling for a lot of money, and now some of these people are trying to get out of them, and unfortunately some people are foreclosing in these condos. And this one right here, this is actually a foreclosure in the condo building. Let's see, we can see some pictures real quick. This is a foreclosure. This unit foreclosed. We're just going to go through real quick for you guys to see this unit. It is on the what floor is this? On the 38th floor. So this building, this condo building has 46 floors. 46, I believe. 46, or it might be 47 with the penthouse, but I think it's 46. And right here, the HOA monthly for this is $1,089 a month. As you can see, it's real estate owned by the bank. So the bank has already taken back this particular condo. They own this condo now. It has foreclosed and they own it. Yeah, so be mindful, like I said, with the HOA, some of these condos down here in Atlanta. I think people, it's always fascinating when I get on some of these, having these live conversations with people, whether it be on YouTube, whether it be on the phone, whether it be via email, and we talk about some of these monthly condo association fees. And when people tell me some things, they're like, what? I didn't realize that in Atlanta, there's monthly condo fees of $1,000-something. Yeah, you would never think, right? In a city that was once considered affordable, things have become very unaffordable in Atlanta. Croy said, Clark, is it a good idea to finance with a new construction condo builder like LGI? There are, is it good to finance with a new construction condo builder like LGI? So we have LGI building down here in Atlanta. I don't think they're making any condos down here in Atlanta. They make single family and townhouses down here. When it comes to new, and I don't really fully know their products, so I don't want to lead you in the wrong direction as far as fully knowing their product. I just go and visit like their sites per se and look around in them. But when it comes to financing with the new construction condo, I would just be very mindful as far as you financing. If you're going to finance with them, of course, you're financing. It seems like with this question, you're meaning that you're going to go through the actual builder's financier, their lender, who they're utilizing. And I guess they're probably offering you incentives and probably telling you that the only way you can get these incentives or possibly an interest rate buy down for a certain term fix, or per se, that you have to utilize their lender to do so. Be very mindful. I would still say shop around when it comes to lending lenders outside of the new construction lender, because I don't think a lot of people realize this, but you can actually still get some of those same incentives if you use another outside lender. Don't make them trick you into thinking that you have to use their lender to get these incentives. If they're at the end of the day, new construction is just like resale. They're trying to sell a product, and if the product makes sense, they're going to sell it, right? So don't feel like you have to get caught up into financing through the new construction for in order to get those possible incentives. I don't know if I kind of probably went on a tangent with that question. There are so many condos in this part of Florida, and the prices are very tempting. What would you do? So in regards to this next part, I would just, when it comes to condos, I know Florida is like a condo area, like LA. You could like condos in the city. New York, the condos, or they call them apartments more up in New York. But I would just be very mindful, because you have a lot of things in place because of condos. My biggest thing when it comes to condos, to be honest, is just the HOA. If you can kind of pull the finances, pull the different documentation, get the HOA meeting, the meeting notes, and all those different things to kind of see what that increase have been as far as the HOA, see if there's any special assessments coming within the next couple, months or years per se. I would just fully do my investigation on the HOA, make sure they have enough reserves in place in case anything happens and you don't want to get hit with a big special assessment. Because a lot of the condo situations is that condos are great because now they're typically cheaper than a single family home, or even sometimes a townhouse, depending on where you live at. The only thing is that which I guess creates the value going down with the condos is the HOAs tend to typically keep going up, especially with older buildings. So I would just say weigh your options in regards to that. I'm not buying no condo. That's just my opinion, but I don't want to sway you from what you would do. But my opinion, I would never buy a condo. My little sister bought a condo, and her and her husband bought a condo for cash in New Jersey. and their HOA is crazy a month, but she said they were okay because it kind of was equivalent to what they used to pay for their single family house monthly mortgage. My thing about condos is that you can't ever get rid of an HOA. I can get rid of a mortgage. Of course, property taxes will still be on the back end. Home insurance, if you decide to keep it, because once you have a house paid off fully, or if you pay it cash, you don't have to pay a home insurance, but it's always great to have it if anything would occur. But an HOA fee, you can't ever get rid of. So I would just say, just be mindful as far as that, because HOA fees typically go up. They don't go down. So like I said, I wouldn't personally buy a condo, but I know it's very tempting nowadays because condo prices are plummeting, depending on where you're at. They're falling. Ms. H say that's why no HOAs ever. Yeah, no HOAs, Ms. H, no HOAs. Kotek Caesar said Washington State just reformed their condo liability laws. Will loosen up the market a bit. It is limited to 4 units. Okay, so that's good to know. So if you guys are heading over to Washington State, definitely check into that information around those condo laws and see what does it pertain to. But yeah, so with this condo, like I said, sorry, hit the mic. With this condo, the HOA is like that, and I'm going to show you guys real quick. And we're going to go to one more, and then we're going to jump off here because I don't want to be, I don't want to hold you too long. I'll show you what this sold for. Let me just see. Can you see it? Okay, I'm going to show you what this sold for. Like I said, it is a foreclosure. It is real estate owned by the bank now. So in 2021, it sold for $902,000, $902,500. They closed in 2021. And now they foreclosed, and the bank is currently trying to sell it at $799. So this is what I'm running into too with some of these sellers that are trying to sell now. I'm running into people who bought properties in 2021, 2022, 2023, even 2024, and they're trying to get out of their homes now. But some of these properties, depending on where you bought at, the value is no longer there. And so with the value not being there, people are now deciding to either one, stop paying because they can't afford to pay depending on life circumstances, or two, they just fully abandon said property. So that's what's happening there. And then I'm going to show you guys one last thing. So this is a condo in this particular building that has already foreclosed. And then I'm going to show you another one real quick. And again, I appreciate you guys being here tonight. All right, so this is another condo in the same building. It's a 2-bedroom, 2-bath, 2.5 bath. Not that many pictures. This is unfortunately going through something similar, but in a different end. This is a sale is bankruptcy. So this is a bankruptcy sale. I am running into this now as well. A lot more people outside are getting pre-foreclosures and outside of, either walking away from said properties or trying to resell right now with limited equity in the property. When I'm talking to some of these sellers, some people are filing bankruptcy claims as well. So I'm seeing a lot of that happening, short sales as well. We discussed on one of the lives before that there are some short sales happening. So this, if you guys have the funds and it makes sense, this might be a perfect market to buy in if it makes sense financially. A condo, no, I'm not buying no condo ever. Would never buy it. HOAs, no. I'm not an HOA person, so I particularly like to be out of HOA communities. However, there are a lot of realtors who enjoy HOA communities and also home sellers as well. I mean, home buyers and homeowners, but I don't. But yes, but be very mindful if you are trying to find a deal in this particular market, in this economy, depending on where you're located at, because this is very state specific, very city specific, very local driven. Make sure you understand what's happening on the back end. But like I said, this is a bankruptcy sale. Again, the HOA here, they didn't put the HOA here, but it's around the same amount. As it says, it's in foreclosure. They're in foreclosure. Let's see when they bought this property. They might not have it when they bought it. Oh, okay, wait. I'm trying not to show their name, so I'm trying to go very slow. All right, let's see when they bought this. So they closed on this actually in 2019. 2019 for $565. So this is outside of those parameters as far as 2021. They tried to sell it in 2021. It didn't sell. They tried to sell it for $715. 2022, I guess they probably bought into the hype with the realtor as far as things kind of selling, more money. They decided to up the price instead of lower the price, knowing that you were already in some type of exiting, trying to get out of it. But instead, you wanted to be greedy, like some people like to be. And they decided to up the price, and they upped the price, and they still didn't get what they wanted. Miss H said, walk away, not worth the stress. Yes, HOA is not worth the stress. Another great show. Thanks, Lang. And so then again in 2025, they listed it, as you can see, the big difference in cost, because as you could, now we're seeing the price plummet in this condo particular building. The prices are plummeting. And in order to get out now, you have to price it according to the 2025 market. As they started shifting in 2023, 2024, you have a big difference where in 2022, you could get that. Like I saw people buying in this building for $800,000, $900,000, $1 million. And so everybody was, out there saying, hey, let's put these things up. Let's get these over astronomical prices. And now some people were able to exit out and got it while others couldn't. And this only turned sour for them now in 2025, where they had 569, 537, and they purchased this for how much? 565. So they're already under what they purchased it for in 2019, and now they're in bankruptcy. So just be very mindful of how you're approaching this particular real estate market, depending on where you're located at. This is not happening everywhere. So I don't want to scare people everywhere, because this is not an everywhere thing. This is a very local driven thing. Rhonda said, where do the bankruptcy people go? Apartments are dunking with family. To be honest, I'm not sure. I feel like most times these bankruptcy people probably go into apartments if it's possible, if their credit score isn't jacked up too crazy. Because typically I would say most people that are in bankruptcy, they probably haven't been paying anything. They can't afford to pay anything. So that's why they claim bankruptcy, or they're hanging on by like a thin strand. So I would think that they might, if they can, credit score wise, exit out before it gets too crazy, or before they claim bankruptcy, or before they miss payments, go try to find an apartment so they're already in an apartment and paying over there, and then claiming everything on the back end as far as bankruptcy and all those different things, foreclosure per se, or they are possibly going to go live with family. So it just depends. I do know some people who have claimed bankruptcy who had a house, and within a year or two, they were able to buy another house. Within 3 months, they were able to buy a car. So I guess it just depends on how you structure your bankruptcy in the court system, that you could possibly, be able to move on to the next without a problem. It says, Miss H said they go to hotels and restart over. Yeah, and they can go to hotels as well to get that restart all over. So there's so many different options. Airbnb nowadays have become an option where people pad splits, depending on if you don't have a family and just by yourself, you're a bachelor. They have a thing called pad split. They have room share, all these different things where you can go and, like Miss H said, start your life over and rebuild. But I appreciate, again, you guys being here tonight. Every Sunday, 7 p.m. Eastern time. If you missed us having our great conversation around a different loan, loan pathways per se that you can travel down outside of the norm, which is FHA, VA conventional, or USDA, go back to the earlier video. We had a great conversation with Kevin Jefferson. Miss H, I appreciate you being here tonight. Rhonda, Lang, Kotek Sita, Croy, Kevin as well, who was our guest tonight. And David, I saw him chime in a little bit in the beginning. I appreciate everybody who was here tonight, and I hope to see you guys next Sunday. And have a wonderful Sunday night, a great Monday and Memorial Day. And take care. And remember, Memorial Day is for us to memorialize and remember those veterans that helped protect us in this country. So have a great night, you guys. Take care, and I'll see you next Sunday. Bye-bye.